Hello traders, this is Blake Morrow and you are listening to the week ahead video for January 31st, 2021, and oh my goodness, I have a whopper of a video today. But before I get into it, let me go ahead and mention a couple of things. First of all, the special that we had that was expiring last Sunday, we actually extended it till this Sunday. And that means that if you're listening to this today, Sunday the 31st, it's going to be gone tomorrow. We extended it because for one specific reason. Tomorrow our F.A.C.E webinars are going to be a little bit shorter. Our free, ForexAnalytix community experience webinars, they're going to be free, but an hour after that we're going to have an exclusive webinar for our ForexAnalytix community moving forward, and that's going to be basically to do in-depth analysis on the bias chart, which for those of you that listen normally during the week, that we build out this bias chart and we kind of give you the key levels based on different technical factors. It's just giving us more time to do it specifically for our traders to answer some questions, and that is going to be launching tomorrow. But in order to listen to that, you have to be a ForexAnalytix customer. So we are extending the discount pricing if you want the premium service. The light service is still $19 a month. If you have the light service, you can still listen to the F.A.C.E webinar and all of our exclusive webinars that are for our ForexAnalytix clients only. So we just extended it a few days just to give everybody an opportunity to get that premium pricing first and foremost. Okay, so I wanted to talk about that. Now also today's video is going to be a little bit different because we're going to talk about a couple of key subjects regarding GameStop. We're going to look at silver or SLV. We're going to look at the VIX, which is very important. And then obviously in currencies, what can we do to really pay attention to a shift in risk? Okay, now before I go into this, I have to say volatility is picking up. You have to be careful. If you remember our week ahead video from the last couple of weeks, we were looking at volatility or the VIX, right? And you can see the VIX has broken higher. This is the chart that we had posted. VIX is holding critical support. Is it time for a rally? Guess what? We rallied. Okay, there's really important things developing right now, and I have to mention that if you're using ForexAnalytix, remember you have your analysis for the 30 instruments that we analyze through here. But I'm going to be using right now our trading view charts so I can draw on them. Because this is really important. Okay, so let's talk about, let's go to GameStop really quick. Okay, and let's talk about this. And if you guys, are living under a rock, maybe you missed it, but GameStop, obviously a company that probably, realistically, the company was on its way out business eventually. Stock was trading around the, $10, $15, $20 range, and then all of a sudden the stock has exploded. Major short interest, Melvin Capital's lost over 50%, tens of billions of dollars due to having a short position. Other hedge funds have lost money, and let's be honest, there's a lot of hedge funds that basically they'll find companies like GameStop or Dillard's or Macy's, and they think that they're going to eventually go out of business. We're just going to run a big short position, and as the company goes out of business, we'll make millions. From when the stock would go from $20 to zero, you'd make the difference. And you have a lot of hedge funds. That's what they do. Well, Wall Street Bets, a Reddit online forum community, has really targeted not only GameStop but other assets as well. And so this is the big talk of the town, because you've got now the public that's basically turned on Wall Street, and you're seeing them take really massive losses, Wall Street, and a lot of people have made a lot of money focusing on some of these. So you got GameStop, you have silver. So you got silver that's running higher, and there's a lot of talk about silver, and big short position out in silver, and can it go higher? And I think you could make a really solid argument that silver will be higher based on current monetary policies from global central banks. Silver will probably surpass $60 where it once was, and that's spot silver. That is, SLV was as high as 48, and may make a move to 100. I could see that argument, and that's actually a pretty valid argument. I think there's a lot of reasons why that could actually happen. Another one that I briefly heard this weekend, and this is where I want to stop and talk about it. I talked about, some of the Reddit people were talking about volatility. Yes, a pretty aggressive short position in the market is short volatility. You short vol when you think stocks are going higher. You just maintain short vol positions when you see these spikes up. Everybody leans into it because look, stocks are eventually going higher, volatility is going to go lower, and let's short VIX. The amount of havoc that could be wrecked on. Did I say that correctly? I'm thinking about what I just said. Keep in mind, it's Sunday morning right now, so it's early, and I'm just drinking my first cup of coffee. Volatility, it could wreak a lot of havoc on Wall Street if it went a lot higher for a couple of reasons. First of all, you got the market's probably pretty short. Second of all, once volatility starts to rally, people queue off of that in all sorts of asset classes and view that as a risk-off scenario. And let's talk about these short positions. If you're short and you're a fund and you get caught short and the whatever underlying asset starts to rip, there's unlimited risk to that, right? Because theoretically volatility can go up to $1 million. That's unlimited risk. It's a difference when you buy a stock. Your risk is if the stock goes to zero. When you're shorting an asset, the risk is unlimited. And so if you have some of these assets moving higher, and then a hedge fund has to turn around and say, well, look, I'm just throwing out a number. I got 50 billion in assets, and I've just taken a really big hit in holding a VIX short position because I thought equities are going to go higher, and I've been riding this position for years, and in and out, constantly being short VIX. But now it's up in my face, and I'm down, let's say, $1 billion. I'm just using round numbers. I'm going to turn around and sell something that book some profits here on another asset and kind of reduce risk. So then they turn around and sell XYZ, and then XYZ goes down. Well, imagine that happening in mass all over the place. Next thing you know, you have a market correction / crash, and that could get a little bit bigger and more out of control, especially if you take a look at technically what happened this week with the S&P. The S&P, we had an outside week, depending on what futures you're looking at. It's basically a bearish engulfing outside week. It's a bearish event, and you can see the S&P is divergent. Slow stochastics are rolling over on the weekly chart. That's an ugly looking chart if you're long. But you take into account volatility moving higher and a lot of these short positions unwinding, and then it accelerates because you get, again, not only are funds losing money on their shorts, they're going to turn around and start selling the stuff that's been working, and that's when it the house of cards comes crumbling down, if you will. Now, it's scary. It's a scary mix when you see people really targeting the system. I'm going to use quote unquote the system. And an analogy I'm going to use for you. Imagine this. Imagine an aquarium, and imagine a bunch of little fish. And all these little fish get together and they're like, I want out. I want out. Let me out. And they all start pressing on the glass. The glass starts cracking. And the glass eventually breaks. Oh, they got out. They also died. They, you know, they didn't know what was on the other side, right? You got to be careful what you're asking for. You know, you got these people that are all ganging up on Wall Street, and they want to bring the system down. But whose 401ks are you going to destroy? Who's, you know, when it comes down, are your parents going to lose money? Are your friends going to lose money? Maybe you don't care. I don't know. But you got to be careful what you ask for. And that's why we have to be very careful at current levels. Now, in currencies, since I predominantly focus on currencies, but as you know, for those of you that are with, you know, ForexAnalytix, every day, you know, you listen to our free webinars. And guys, if you don't know how to get to our F.A.C.E webinar every day and get my thoughts every morning with the rest of my team, you know, our team, so just, you know, for the rest of our team, and know what we're thinking throughout the course of the trading session. Right here, we're on ForexAnalytix.com. It says webinars. You got European crossovers specifically for ForexAnalytix traders, but you can register for our free F.A.C.E webinar every day. We have great interviews. The link is actually in the description if you're watching us on YouTube. Speaking of which, before I continue on with my thoughts, if you think this video is going to be beneficial to you next week, you haven't even heard what I have to say about currencies yet, make sure you give us a thumbs up. Oh, it goes a long way. It goes a long way for me, for us on YouTube, for our, you know, our team posting this and putting it out on social media. It makes us feel good, and it also actually increases our viewership on YouTube when there's more likes, and if you're sharing it on social media. So if you see this on Twitter, you see this video on LinkedIn, you know, hey, share it, please. We'd appreciate it. And thank you so much. It means so much to me. So thank you so much. Yeah, here's our free Spanish webinar. Guys, you know, make sure you're listening to these so you can get our ideas and thoughts all the time. All right, so if you want to know if currencies are really going to start moving, yeah, we're watching volatility. Yeah, we're watching the S&P. But what are we really going to be looking at? What am I really going to be looking at? I'm going to take you over to dollar Mexican peso. Did you see this rally at the end of the day on Friday? The dollar Mexican peso, and you guys have been listening to me for a while now, knowing I've been explaining to you, hey, we've got a big base. You know, I've blogged about it. You know, I've talked about it on a daily basis. Big bullish base. We are approaching some really key resistance. That resistance comes in at 2070 to 2080. So it's these previous lows here. Here, let me draw this out for you. Previous lows right over here back in September. Spike highs back in November of last year, December, and you can see that big resistance zone. You know why that's huge? Because if you zoom out a little bit, this is a daily chart. You take the post COVID spike higher up to 2570, and the move lower. We've been building this bullish base for a while. I could very easily see the dollar Mexican peso under the right conditions with some risk off, see the dollar Mexican peso spiking up towards the mid-20s again, very easily. Okay, it's not just the dollar Mexican peso. Look at the Aussie dollar. Aussie dollar has had a massive rally. Now, am I bullish Aussies? I am. I actually am. I think that, you know, there's going to be inflation increasing in the future. I think the global growth following massive stimulus is going to accelerate the prices of commodities globally. But that doesn't mean we're not going to have a hiccup between now and then. So, the Aussie dollar is at risk after breaking this channel last week. We're at risk of really, moving back down towards the probably low 70-cent level before moving higher again. And yes, I think this is a V-shaped recovery. Yeah, I think it's extremely bullish. You've heard me say that, on a weekly basis for the last several months about the recovery here. But that doesn't mean that we're not going to have pullbacks in the Australian dollar. Now, your question to me might be, well, Blake, will the dollar rally, all around? I think it will. I think that the dollar will act better against certain currencies. The market's extremely short dollars. And, there's no better recipe for a dollar to rally than being, the whole market being short dollars. And then on top of that, you've got major divergences on a daily and weekly basis after a very elongated move. So if you're bearish the dollar right here, why weren't you bearish the dollar up at 102? Well, maybe you guys have been. I know a lot of people that are extremely bullish up there. So now, after a 13% decline in the dollar, yeah, could we have a couple percentage point rally from here? You bet. We've got an inverted head and shoulder pattern, and I think that we could probably see 92, 93 again, maybe even depending on how crazy things get, maybe even a spike back up to 94, 95. So not all dollars will be equal. What I mean by that is you could short the euro dollar, and in a risk-off environment, the euro might drop down towards 120, maybe 119. But you take a commodity currency like the Aussie could go from 76 cents maybe back to 70 cents. Depending on how aggressive the market got, if we did see an aggressive sell-off. You know what I'm saying? If we did see an aggressive sell-off, I'm trying to remove that. There we go. We could quite possibly, get a substantial pullback. I mean, when I say substantial, you talk about a 38% retracement of the spike low of 54 cents to the high here at 70. Let's just say roughly 78, and you take like a 38% retracement. That brings us below 70 cents again. That would take us down to 69 and a quarter. Could you imagine that? Think about this for a second. You got the whole market long Aussie dollars. It's starting to break down. You get this risk off, volatility starts to spike. SLV goes to 60, GameStop goes to 500. Half of the big cap stocks get 20% shaved off because you just get people that have to take some profits somewhere and to reduce risk. And the Aussie drops right through support. No one thought I'd break through 70, trips all the stops below 70. We hit 69 cents and some change, and then start the recovery from there. It's all very viable, and I could see it happening. Doesn't mean that it's going to happen, but based on positioning and based on how far we've gone and how little pullback we've seen in the markets, this is, look at this S&P chart. This is a weekly chart. We've gone from 2,200 to 3,800 and, almost 3,900. And then, you've got all these variants of COVID and, really rough rollout as far as vaccinations go. Maybe, people start going, well, maybe the global economy won't recover as quickly as we thought. Maybe some of these stimulus packages get there's a lot of not bipartisan effort, and you might get some pushback and more negotiations, and look, we're facing a lot of risks, and the economy might be not as robust in the months ahead. And if that gets into the market's head and sentiment starts to shift, we could see a pullback, and a substantial one too. So we have to be on guard, and that's when you start looking at the currency market and seeing what can happen around here. I'm really just focused on the dollar Mexican peso right now. That doesn't mean I'm going to be long. Although I've been trading it on the long side, that doesn't mean I'm going to be long, just getting long right now and just trying to ride it till the mid-20s. But I sure will be watching it every single day. Speaking of every single day of this next week, there's some pretty important data. On Monday, we have the RBA rate decision. Well, it's actually Tuesday morning for Australia, but we have that. We have ISM data out of the US and Canada on Monday. Remember, it's non-farm payroll week. That means Friday, Canadian and US employment are going to matter. Okay, going back to Tuesday, we have New Zealand's employment data. Well, actually, it's Wednesday morning in New Zealand, but for a lot of us, it's still Tuesday. On Wednesday, we have ADP data in the U.S. as we prepare for non-farm payrolls. On Thursday, we have the Bank of England rate decision, and then Friday is a bunch of jobs reports. So guys, it is going to be a busy week. And by the way, if you want to follow along what I was just saying, just look on your calendar on ForexAnalytix. And I want to mention one last thing about ForexAnalytix. You notice we have these are Bloomberg and Reuters articles that are and headlines that come up on LiveSquawk. The LiveSquawk audio service is going to be turned on here in the next we're hoping within the next week, but it might be here in the next week or two. If you own, or let me say this again, or say it differently, if you use ForexAnalytix, you can get a discounted amount for your LiveSquawk audio service. So if you go directly to LiveSquawk, it's going to cost you, I think, $60 a month. If you're using ForexAnalytix, I believe you're going to get the audio broadcast you can get the audio services for $50 a month, which is, it's a 20%, roughly 20% discount. It's a substantial savings. And that benefits those of you that are part of the ForexAnalytix community. But guys and gals, it is going to be volatility is going to pick up. And I know we had talked a lot about that at the end of this last year on how volatility is going to pick up in the markets. And that's going to translate to higher volatility in the currency markets. There is no better time than to be a ForexAnalytix subscriber right now and being able to get myself, the team's ideas throughout the course of the trading session, whether you're listening to the exclusive ForexAnalytix webinars like the daily roundup or the F.A.C.E webinar when we go over the bias chart, or you're in our chat rooms and chatting with us all week long, because that's where I'm at all week, is right in the chat room, which is located right here in the upper right hand corner of the screen. Okay. All right, guys and gals, my name is Blake Morrow. I've chatted for long enough. I want to thank you so much for listening in today, and really appreciate the like on this video and the share and the subscribe to YouTube. We really appreciate if you like this video, share this video, and subscribe to this video. Have a great remainder of your weekend. I'll see you tomorrow morning on the F.A.C.E webinar. Thanks, everyone.